Okay. All right, everyone. Well, welcome to the financial workshop. Here we are, August 2014. And before I get started, just even before I introduce myself, I just need to ask a question, just so I kind of know who's in the audience here. If you have $60, you're down. Let's say you're down to your last $60. All you have is $60 left. And you've got three people you owe money to. The utility company, you owe them $60. You owe your gardener $60, and you owe your brother $60. Just think about, who are you going to pay? Who would you pay? All right, who says utility company? Okay. Who says my gardener? Okay. Who says my brother? Okay. All right. Okay. I'm just curious. Just curiosity. Curiosity. Somebody asked me that question this week. I thought I would ask you guys too, out of curiosity. Okay. Well, let me just talk about, who am I? My name is Arabian Morgan. I am a certified public accountant, or CPA. And this is a financial workshop. Today's workshop is called Alternative Investments. And just so you know right up front, I have absolutely nothing to sell you, okay? So you can be at ease. There's not some sales pitch coming at the end. I have nothing to sell you whatsoever. I've been a CPA, or been practicing in the world of public accounting since 1997 full time, okay? Since 1997 full time. My area of specialty is anything that affects individuals and their finances. That's my area of specialty. I don't do a lot of accounting for corporations. I don't do a lot of taxation of corporations or anything like that. But I deal with those things that affect individuals financially. And so certainly talking about alternative investments is kind of one of the things I do, and just kind of share with people as the issues come up. And over the years, I've worked with the very wealthy and the very poor, and everybody in between, okay? When I say the very wealthy, I mean people that they owe the IRS, you know, they have, their tax bill is like $10 million, okay? And they just write the check out for $10 million. So that's the very wealthy. And then the very poor, the people who, you know, man, I just live on the government assistance programs, okay? So, and everybody in between. So I've covered a lot of ground since 1997, starting with this full time. And so I tell you that to give myself a little bit of credibility. Since you're here today, I just assume that you give me a little bit of credibility for you showing up. And it's okay to walk out now at this point too, in case I got that wrong. But I just wanted to let you know, number one, I have nothing to sell you. Number two, I've kind of been doing this a while. All right, this is just one of several topics to talk about. Okay. Alternative investments. Let me just start with a definition. When I refer to alternative investments, I'm referring to one thing. When I say alternative investments, I'm referring to investments in anything outside of you investing your money in the stock market or the bond market, what I call financial markets, just outside of you investing in stocks, bonds, mutual funds, investments that do not include those. Now, as I go through this particular workshop, I'm going to mention several alternative investments, but you know, like what's not included in those financial markets I just spoke of. If you want to be an options trader, I hear a lot of commercials for, you know, learn to trade options in the stock market. Those are not traditional stock market investments. They're just not. Okay, so that's an alternative investment. So that falls under what I'm going to be talking about today. You know, you investing in your company 401k or 403b or some retirement plan with your company, those are stock market investments, traditional investments. I'm really not focused on those today. Okay, so this is really everything outside of the traditional investing in the stock market or mutual funds. So I just want to lay a foundation of some things you need to know for all alternative investments, meaning before you make any of these alternative investments that I'm going to be sharing with you, you have to know just some foundational things. Number one, you never make an alternative investment unless you have a 4-month emergency fund in a savings account. Just sitting in a savings account earning 0.000001% interest every year. You need 4 months of your living expenses sitting in an emergency fund. If you haven't done that, you shouldn't be doing anything I'm about to talk about. You just shouldn't. That's something you should be able to do before you do any of this, okay? And when I'm referring to investing, I really mean you take your money, you place it in some sort of an investment with the expectation of, at some point in time, getting that money back plus a little bit more, maybe a whole lot more. That's what I mean by your investing. So I'm really not talking about you starting a business. So if you want to go do some multi-level marketing projects, that's really a business. I'm really not focused on that today. That'll cost you a couple $100 to learn that you're good at it or you're not good at it. I'm not really focused on that, okay? But before you do make any of these alternative investments, you need at least a 4-month emergency fund just sitting in cash at some savings account, maybe a credit union. That's just something you always need. Now, before you make any of these alternative investments, now I'm going to share them with you, and I'm going to share my own experiences with them also. My experiences meaning my experience is me personally doing these alternative investments and my experience consulting with other people who've made these alternative investments. Some good success, some bad things, so that's what we're going to focus on. But I always want you, before you make any investment here, always get an independent third-party opinion, an objective opinion from somebody who could care less whether or not you make the investment. You need someone knowledgeable about the investment who has nothing to do with the investment you're about to make so that they can educate you and teach you, how does your money get in? How does your money get out? Is this a good thing for you? Is it a bad thing for you? Now, they're not telling you to do it or not do it. They're not trying to sell you anything. They're just an independent, objective advice that you need to get before you make any of these investments. Because some of these are going to sound really cool, some are going to sound pretty sexy, and some are just crazy. Some are just crazy, okay? Just laying the foundation. Before you make any of these investments, you're going to have to do your research. Lots of research. And you have to be careful where you do your research. Part of it might come from this objective third party, somebody who has nothing to do with it, but you need to spend time and just learn the ins and outs of things before you go put your money in it. Let me lay this foundation before I get into it. The reason for all of this research that needs to be done, you need to avoid scams. You need to learn to avoid scams. That whole Bernie Madoff thing that you may have remembered from, several years ago now, with enough research, could anyone have avoided that? Absolutely. Basically, it was just a salesman saying, hey, give me your money. I will return to you a certain amount of interest and gains on your investment. And it just sounded really good, and people jumped right in. With enough research, it could have been figured out that it probably was not a good thing. But then sometimes you'll do a lot of research, and you'll still be taken advantage of. Because all the research in the world won't reveal everything to you. It just won't. So sometimes you're going to get taken advantage of with different types of alternative investments. It just happens. It does. It really does happen. But there are some things that should send off red flags to you. For example, if someone says, I have a no-lose investment for you, you're guaranteed to make 10% a year. You're guaranteed to make 10% a month, or you're guaranteed to make 10% a day. Now, I just made that sound better and better and better. And I'm telling you, the higher the rate of return, the higher that your profit is going to be, the more riskier it is. I could just tell you all right now, okay, everybody, if everybody in this room gives me $100 today, I will guarantee you by next Sunday, I will return to each of you who gave me $100, I'll return to each of you $5,000. That sounds like, hey, I can do that. $100. If it doesn't work, what? I'm only out $100, right? Now, you need to be able to ask people questions. And if they don't want you asking them questions about the investment, don't make the investment. And so when you question me, you say, well, what are you going to do with the money? And I'll say, well, here's what I'm going to do. I'm going to go over here to Home Depot, right here on Century. I'm going to get a shovel, some jackhammers, some dynamite. I'm going to tunnel in, because see, my brother owns a building right next to Bank of America. I'm going to tunnel in underneath my brother's building directly into the vault of Bank of America. I'm going to take that money out of there. By next week, I'll be able to give you your $5,000. That's what I'm going to do. No, but see, when you now see, that sounds a little outlandish, but when you start to ask people, how does this investment work? What are you going to be doing with my money? Then it should be revealed, or it should start coming to light. What are they really doing? And if it doesn't make sense to you, it's okay to walk away saying no, because I just wasn't smart enough to understand it, so I'm not going to put my money in it. It's okay to look foolish. It's okay to look foolish. You with me on that? It's okay. Okay, now we're back on the record. My highest points in life are when I told people, I'm sorry, I just don't understand. Some of the best times of my life is telling people I just don't understand and walking away. Because the smarter I pretended to be, the more money I would lose. I'm the guy who's invested in a gold mine of a company. When I say a gold mine of a company, I literally made a direct investment in a gold mine. Yeah, in one of the Dakotas, which I've never been to either one. I don't even remember which one it was in. But just, I didn't ask any questions. Just because I trusted the salesman that brought it to my attention, never saw that money again, okay? And I was listening to an NFL football player. How stupid was I? Okay? Now, it's okay to laugh at what I did, okay? I just don't want you to cry when you do something stupid. Because, see, I never invested more money than I could afford to lose. Meaning, if I lost it all, it wouldn't break me and set me back 10 years or set me back 30 years. It didn't break me to do these things I'm going to tell you about. It didn't break me. So that's another foundational item. You don't want to invest more than you're prepared to lose, in terms of it shouldn't break you if this investment just doesn't work. Maybe you lose half of your money. Maybe you double your money. But if the worst case scenario, it shouldn't break you. It shouldn't set you back many years, okay? So that's why I say don't even start this until you get that, until you have at least a 4-month emergency fund. Meaning you can live for 4 months just out of that savings account without doing anything else. That's just, that's just a good thing to have. I say that at almost every financial workshop. Just have an emergency fund. Okay. You need to understand the investment. If you give your money or put your money in an investment, you need to understand, how does it come out? If you don't understand how it comes out, there's something you just got to learn before you do it. If people promise you a lot of rates of return and gains and big, huge profits on your investment, you need to understand, when does that become cash and get back in my bank account? You need to understand those things. If you are going to be signing any sort of a contract, you got to read the contract first. Any contract, you got to read it first. And you should not read it in front of the salesman. You should take it home, get your third-party independent objective advisor, and you guys sit down and read it together. Now, I can prove to you, most people and I'm going to generalize this because there are a few exceptions, and you all may be them. Most people in America, when they go to buy a car, and they're not just going to pay cash for it, they're going to borrow money from the credit union or maybe from the company. Most people don't read that contract they sign. And they put their signature or initials in 20 different places on these long contracts. Most people don't read it. Most people don't. So next time you go to buy a car, if you're not going to pay all cash for it, and they give you all those paperwork to sign, just say, well, I'm going to take this home and read it over. No, I'm going to take this home and read it over. Just this year, my wife and I, is it okay if I share? I'll talk about me on some things, okay? Just this year, my wife and I had an alternative investment presented to us, and we wanted to, we did our research on it. We talked to whoever we needed to talk to about it. We got into agreement on why we were making the investment. Now, this investment cost, just to make the investment, the commitment was $30,000, okay? $30,000. Now, it was a 6-month investment, 6 months to a year-long investment, meaning we would get our profit, if not at the end of 6 months, at least at the end of 12 months, okay? And the people that we were making the investment with presented us with this contract to sign, several pages long. They walked through the contract with us, and these people were very nice, very polite. They said, so what we want you to do is, we want you to take this contract home, review it together. Every paragraph you read, put your initials next to it. And then they said, just don't sign it officially at the bottom until you're back in front of us. But we want you to read every single paper, every paragraph, initial everything. If there's something you don't understand, bring it to our attention. Let us talk about it. And that took us maybe a week to do. It took us a week to do it. We're making a $30,000 investment. And see, that might sound like a lot of money, but to lose it all would not break us, would not set us back. We had the 4 months minimum emergency fund in the bank. And so I'm just saying, it was something we wanted to do. We had questions. So we went back, we talked about it some more. And the way the investment worked pretty much was, $20,000 to begin, and at the end of 2 or 3 months, we'll need another $10,000 for the investment, to be complete. And we said, okay. So here's the $20,000. A couple months go by. The investment wasn't going so well. And you know what? We just said, we're out. We stopped right there. Cut our losses. Bye. We're done. So that $20,000 is gone. It was a $30,000 investment. Before we put the next 10 in, we got a progress report that basically said, no, we just weren't happy with the progress report, so we're out. And we walk away. Just like that. Didn't miss the money. Well, now, when I say it didn't miss the money, it didn't break us to spend the money or put the money into the investment. The profit on it was so huge for us. If it would have worked, we've been the happiest people around. But here's what you can learn from that. Number one, if you're married, don't make any alternative investments without getting into agreement with your spouse. You need to be in agreement with your spouse, and not one of those, you got an overbearing husband and you're just going to agree to everything he says, or your wife is just so ornery, guys, that you just buckle under and say okay to whatever. No, you guys need to talk it through. You need to talk it through. Talk about how you're going to spend the profits if it works. Talk about what you're going to do if it doesn't work. When we got out of our investment after 20 grand, my wife and I, the only thing I said to her, I said, we went for it. At least we went for it. Hey, but we went for it. That's all I could say to her at that point. But food's still on the table, bills are still paid, emergency fund is still there. So let that be some groundwork just to kind of put you in remembrance of these things. You should be able to explain the investment you're about to make to a 4th grader. Not to a 4-year-old, but to a 4th grader. You need to be able to break it down into plain English language and explain how this investment works, what are some of the pitfalls of it, how, what makes it a profitable investment, things like that. You got to be able to explain it to a fourth grader. So that's some foundational information for you, foundational information. So I'm now just going to list off some various alternative investments. If I think they're kind of silly or stupid or some other things you could do instead of this, I'll mention it, okay? But like I said, some of these everyday things you hear all the time. Others, they're kind of obscure. They're just kind of obscure. In fact, I just thought of a couple more. Let me just write it down. Yeah, I just thought of one more there. Okay, so here we go. Number one, because of the age of many of you in the room here, I'll say this. If any salesperson wants you to open a self-directed IRA and have the investment in your self-directed IRA, just know you definitely need that third person, that third-party, objective, independent person to talk to you about it. You just do. Okay, you just do. If you are near the age, meaning you're not there yet, but you're close to it, if you are near the age of 70, when I say near 70, that's from age 50 to age 70. You have no business opening a self-directed IRA. Once you turn 70 and a half, the self-directed IRA becomes more expensive than you could ever believe. Okay? So just self-directed IRAs, anytime someone wants you to make an investment through a self-directed IRA, because basically they're going to say, hey, you could just roll over your 401k money into the self-directed IRA and make this investment. Or take your IRA, roll it over into another self-directed IRA, make this investment. They have nothing but, it's just bad news. It's bad news. I haven't heard not one good news result from it. But I'm not saying don't do any of these things. I'm just saying you need an objective advice. Objective advice. Okay, variable annuities, fixed annuities. I almost consider these two phrases curse words. Variable annuities, fixed annuities. Now, if you already have a variable annuity, a fixed annuity, I am not telling you to get rid of it or anything like that. I'm just saying no new money should be put into investment vehicles, okay? All right, now here's something you probably haven't heard of. Promissory notes, or loaning other people or other companies money. These are investments. Now, hey, I've got this great business right here. We just need some startup capital, or we need some more capital to continue. Will you loan us some money? Here's a written contract saying I'm going to pay you back. Don't loan people money. Now, that's my personal opinion on it. Okay? I don't care if they go to your church. In fact, the list of things I have on this paper, half of them are just from working with people here at the church. Okay? If they have a business and they need to borrow money and can't borrow the money from a financial institution, there's a reason for that. But they can sell you a lot easier, and there are people around here that, unfortunately, they have great pieces of paper, and the paper is worthless. It's just a piece of paper. Let me tell you the best way to loan people money. When you loan them money, you get collateral from them right away. A good example, my mother, now this happened several years ago, my mother wanted to take her little nieces out to the LA County Fair. She needed a couple $100, until payday. And so she came to me, asked for a couple $100. So I said, okay, I'll give you a couple $100 and you let me hold on to your wedding ring until you pay me back. Deal? And she said, okay. I held on to her wedding ring until she paid me back. That's how you loan people money. People want to borrow $1,000 from you for 30 days. Okay. You keep their car until they give you back the money. I don't mean you just get title to their car. No, you keep the keys, you keep the car itself until they pay you back. That's how you loan people money. If you're not a financial institution, that's how you loan people money. Now, I have I asked you all before I got started if you were down to your last $60 and you had the utility company to pay $60 to, or your gardener you'd pay $60 to, or you owed your brother $60, who would you pay? The majority of you said the utility company. The majority of you did say the utility company. Am I right? And it's because of that you should not loan money to individuals. Because the right answer in my mind, if I loaned you $60 and I'm your brother, your lights need to be turned off before you don't pay me on time. That's it. I mean, you all just said, I'm gonna pay my light bill first. It's because of that you don't loan people money. And really, if you said you would pay your gardener before you pay the utility company, that's better than paying the utility company. You pay the person who you see on a regular basis standing in front of you. The utility company is not going out of business because you don't pay them. That gardener needs to feed his family. And your $60 is going to put food on the table this week. So just take the brother out of the equation. It's because of thinking like that I say, don't loan people money. Don't loan people money. And don't loan small businesses money. Don't loan small businesses money. Now, here's a case in point. I make these alternative investments that I'm talking to you about, okay? Last year, I made some alternative investments loaning a particular small business money, all right? The rate of return was, anybody got a calculator? All right, you calculate this for me. Here's the rate of return. 365 divided by 45 times 0.05. What'd you get?
0.45, so 41%.
Okay, so 45%. That was the rate of return each year on me loaning. So basically, I'm charging them 45% a year. Okay, now those were the alternative investments I was making last year. 45% rate of return to a small business. Now this business can go under at any time. Maybe they don't pay me back. Now, so 45% rate of return. That sounds wonderful. Remember, the higher the rate of return, the higher the risk. You know how long it took me to research that business? I had been researching the business for 3 years. They didn't ask me. In fact, I went to them asking, could I loan them money? I went and asked them if I could loan them some money. And I knew when I loaned this money to them, every 2 months I should get my money back plus the interest. Every 2 months. Now, if I would have lost all of that I was investing, and now I was investing less than a total of $12,000. At any one point in time, I will have never invested more than $12,000. Meaning, we go back to that foundational information. If I lost it all, it wouldn't break me. It wasn't going to set me back. It didn't come out of my emergency fund. But praise the Lord, I got every dime of it, plus all the interest that went along with it. You know, so that was a success story right there. But man, I researched that business for 3 years. 3 years. Small business. Don't you make that investment without some independent advice. I don't care what you know about the owners. No, there's shady people everywhere. Shady people in church. Our church is a laundromat. Every church is a laundromat. It's a laundromat. This is where we come to get cleaned up. Okay, more investments. Master limited partnerships. Has anybody heard of master limited partnerships? Okay, here's the sales pitch, usually from a brokerage company. You put some money into a master limited partnership, and it sounds great. This is all the stuff I've heard around here. Basically, companies like Now, I'm not coming down on any of these brokerage companies. I'm just saying these are some representative companies. Companies like Morgan Stanley, Merrill Lynch, which is purchased by Bank of America, they're investment companies. When they see you have a lot of money in your bank account, they might offer them to you. And they promise you all this rate of return, this profitability and stuff. The problem with them is simply you can't get your money back whenever you want it. You got to wait a certain time period, or there's substantial penalties. And an alternative to master limited partnerships, they sound wonderful. They almost look like stock market investments, okay? Because Merrill Lynch and Morgan Stanley come to you with them. The alternative, just invest in mutual funds. Stocks, bonds, just mutual funds, okay? And the only reason they prefer to sell these to their high roller customers is simply that the salespeople get a huge commission. That's all, just huge commission. But you'll be making the same investments in a mutual fund. So anytime some investor approaches you about master limited partnerships. In fact, my clients that own or have these investments in master limited partnerships, I charge them $300 more to do their tax return than I ordinarily would have, just to do the paperwork that comes along with it. Okay, enough said on that. Investments in small businesses, meaning investments in businesses that are not publicly traded on the stock market. Be careful about making these investments. You need to understand one thing in particular. Whenever you invest in anyone's business, whether it's your brother's, your cousin's, or some other small business that you know about, if you become a part owner in that business, the business never, say never, the business never has to give you back your money. Never. Never. And I'll prove it to you. When you invest in the Walt Disney Company, everybody know Disneyland, ABC television. When you invest in the Walt Disney Company, that company never has to give you back your money. So investing in a small business, it operates the exact same way. They never have to give you back your money. The primary way to get back your money by investing in the Walt Disney Company or a small business is to find some other sucker to sell your investment to. Sucker meaning another person, just maybe the company will buy you out, I don't know. But a small business, very unlikely. That's why in the stock market, it's easy to find people that'll buy the Walt Disney Company stock from you. There's a lot of people wanting to buy it from you all the time. So that's why the stock market investments, aren't in this category of alternative investments, but these small businesses are. Okay, real estate investments. Real estate investments. These are alternative investments. Whether you're just buying a vacant lot of land or rental properties, these are alternative investments. The two things I want you to understand here, and really this can go for any of these investments, your time horizon, meaning the time to get your money back, sometimes you need to give yourself at least 5 years, sometimes 10 years to get your money out. So when making real estate investments, I'm just telling you, rental properties or vacant lots of land, maybe you're buying a condo and going to rent it out, whatever. Don't expect to get your money back for at least 5 years. That's the shortest time period. That's the shortest time period. But, you want some independent advice. And one of the things I learned the hard way about rental properties, I learned how to make the investment in the rental property, but instead of it just being an investment, I started to treat it like a business and tried to operate it myself, and then quickly, when I say quickly, after a couple years, realized I'm no good at managing rental property, and it's better to pay someone else to manage it and just let it be an investment. It was one phone call too many that made me, while I was on vacation, I said, I need a property management company. Something's not right here. Yeah, just one phone call too many while I was on vacation. Or asleep. All right. Precious metals. Remember, I said, let me go back. One more thing on the real estate. Usually people are borrowing money to make these real estate investments. Now, listen, the only thing, when you borrow money to make any investment, you are adding a level of risk to the investment that wasn't normally going to be there. Anytime you borrow money to do it. So just know that when you borrow money to buy real estate, you're going to have to start paying back that mortgage, fairly quickly. When it comes to flipping homes and flipping properties with real estate, to me, that's not an investment, that's a business. And if you don't understand that business, you're going to lose a lot of money very quickly. Because you got to buy the property, fix it up real quick, and then find some other joker to sell it to for more money than you paid for it. And if you can't do that efficiently, you can't be waiting 5 years on that. If your goal was to just flip it, you gotta understand that. So that's a business. That's not really an investment. And I've seen so many people not understand the business of it. Now, if you just want to be the money man, so that the people who are going to flip the property don't have to borrow money, or they're borrowing it from you, that's one thing. But I've seen people taking advantage of that way too. So you gotta know that business. That is a business, flipping property. Precious metals. Anybody heard of precious metals? All right. Oh yeah. Gold, silver, diamonds. You can make these investments all day long. But like I say, I don't want you putting more money in there that it's going to break you if you don't get the money out. All right. So these are alternative investments. You really got to learn about them. Foreign currencies. Foreign currencies. Now there's a silly way to do it, and then there's the wrong way to do it. Okay. The silly way to do it. I have traveled this all over the world twice. And one of the things I do whenever I go to a different country is I always get foreign currency. I like foreign currency. And I have a collection of foreign currency from around the world. This is the silly way to invest in foreign currency. I basically take the equivalent, the American equivalent of $1, or maybe $5, and I say, I would like your hard metal coins, any denominations you have, and basically I come home with that. Now that's a silly way to invest in foreign currencies, okay? Basically, I just like to show people that come by and say, oh yeah, you want to see my foreign currency collection? Here you go. And I show them all these things. They're nice and shiny. I don't plan on making any money out of that unless some silly person walks through my door and wants to buy them. That's one thing. But, but some people, some countries, Zimbabwe dollars, some people invested in Zimbabwe dollars, worthless. You got the Iraqi dinar, not worthless yet, but maybe they're not, skyrocketing in profitability at this point, but you got to be careful. That's all I'm saying. Be careful before you invest in these foreign currencies. Also, there's a limited market for some of these alternative investments, meaning when it's time to sell your investment, like gold, I know people who literally have small chunks of gold bars at their house. And I'm like, well, how do you trade that in for anything? How do you get cash out of that? Who do you sell it to? The fewer the people that are available to buy it from you or want to buy it from you, the harder it is to cash in on it, the less the profitability is going to be. Yeah, so you got to remember that. And sometimes you hear commercials, and it's like, we'll sell you these gold coins, and we'll buy them back from you if you ever want to sell them back. Wait a minute. If the only people who want to buy them from you, the person who sold them to you, and they don't already tell you, they're going to charge you fees to buy it back, fees to sell it to you, and they're never going to give you what you gave them for it. Yeah, they charge you to store it as well. So I'm just saying, it's a limited marketability of a lot of these investments. Some of you might be into artwork. Anybody here, you like the Picassos? All right. Yeah, you okay? Yeah, it's okay. I like certain types of artwork. And I'm not the connoisseur of this type of artwork I like. I just like to look at it. I like to buy it, but I don't need a certain person to paint it. I paint it myself if I had the time. But all I'm saying is this. You got to know when it comes to art, you got to know what you're looking at. Because there's you can be scammed really easily with artwork. I mean, you think you know what a Picasso looks like. But I don't know. You could watch TV these days and see people faking the artwork and just selling it, and that goes on all the time. I've been to a museum and I'm looking at this picture and I'm like, That's not, it was a painting, and this is going to sound comical, okay? It was a painting of the British flag. And people were like, oh, it's such a wonderful painting. Now me, I had just finished a class on Europe, just a college class on Europe. And I'm like, it's upside down. I said, it's upside down. And they said, what do you mean it's upside down? I said, it's upside down. But they were just going on and on about it. Listen, if you're into it, you need to know what you're into, all right? All I'm saying, that one painting was upside down. The flag. If it was a flag, they would have hung it upside down. It was just a painting of the flag. All right. Anyway. I have personally, now some of you all may have done this in your lifetime. I have a trading card collection that I've personally invested in. I probably have invested a total of over a 20-year period of time, so you have to understand this now. Over a 20-year period of time, I have invested in several trading card collections, thinking they were going to go up in value and I would eventually sell them. Within that trading card collection, I have certain, what I believe are precious comic books. It's almost comic. I keep from laughing. But I used to go, I was the guy that would go into dusty warehouses in Hollywood looking for certain record albums. That was me. And wouldn't stop until I found it. And I found every one I was looking for. I still have them, near mint condition. And I remember rolling up my sleeves, putting on dust masks, going into all these warehouses looking for these things, finding them. And to me, the fun part was finding them. But then all of a sudden, the world changed. And eBay came. Now, I don't have to go into any warehouse looking for anything. I just look on eBay and somebody's got it and they're trying to sell it. I have what I thought was a priceless collection of Michael Jackson memorabilia and trading cards. And then when eBay came along, I'm like, a lot of people have this. After the dude kicked the bucket, man, I was like, okay, what can I get for this stuff now? Nothing. 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 After eBay, my comic books, I only have 5. Only 2 types of comic books because I got 4 of one and 1 of one. I don't like comic books. Never read them. I just heard that these will be worth some money one day. I bought G.I. Joe #1. I paid $8 for it. Mint condition. In a hermetically sealed plastic bag. Kept it away from the sun and light and stuff. It's worth $4. I bought that like 25 years ago. Now, G.I. Joe #2, which my friends all bought, now that's worth some money. That's worth some money. X-Men #1, they said, Arabian, you gotta buy it. It's only $200. And I didn't have $200 at the time. Today, worth several thousands of dollars now. But back then, I didn't have $200. It would have broke me to spend $200 on a stupid comic book that I didn't even want to read. So I'm just saying, those foundational elements I gave you apply to any type of investment. I told you about my gold mine. I told you about this recent investment with my wife. My real estate investments, over a 10-year period of time, they do really well. But in that 10-year period of time, there's a point where they're really good, and you should probably sell them. But in that 10-year period of time, they're really low, and you feel like an idiot if you do sell them. Now, I can't say when those time periods are for anyone going forward, but within that 10-year period of time, I had real estate that I bought for $200,000. You know, somebody offered me $1 million for it, and I said no. I said no. I bought $1 million property, And it sounds great when I tell you, yeah, once a month I get a call from the management company and they say, hey, we're sending you a check for $1,500, we're sending you a check for $3,000. I love those phone calls, and they come. But the part that I don't like is in the months where they say, you know, we had to do some repair work, we're not sending you a check at all this month, but all the bills are paid. Okay, that's cool, that's cool. Or the phone call I really don't like, you know what? We've got a bill here, we need to make up for this $2,000, you know, we need you to send us $2,000 to cover these expenses that are about to come in. You know, we have 5 vacancies here, some of your tenants didn't pay. I hate those phone calls. Now, I'm just telling you, I get all 3 of those phone calls. Types of phone, I get all 3 of them. And I don't lose sleep over it. I got my emergency fund. I have some money just in case this rental property thing doesn't work out fund. I didn't even go visit the rental property for a long time. And so I decided to go visit and just walk around and see some stuff. Man, when I bought this one place, the garage, I could walk into the garage, you know, had a lot of headroom. Now I'm walking in and there's like the low ceilings. I'm about to bump into it, you know? And I was like, whoa, if I call up the management company, I'm like, hey, this needs to be repaired right away. They said, you know, we'll take care of it right away, Mr. Morgan. That'll probably cost about $2,500. Fine, get it fixed. But it was nice to be able to say, fine, get it fixed, knowing I got the $2,500 without it breaking me. Some investments require additional investments over time. You have to know when to quit. You have to know when to say, this investment's awful, and I'm not going to sink any more money into it. I'm just going to walk away from it. And that's what my wife and I did this year. After $20,000, the remaining 10, before we put that in, we're done. That's it. And don't go ask my wife, what investments were you making? I would have told you if it really would help you, but it won't. Because I'm not trying to discourage anybody from making that type of investment. But I'm just saying, it didn't work. It wasn't working. So we just said, that's it. That's it. All right, everybody. So with that, I think I'm going to bring that to a close right there. I'll bring that to a close. All right. Does anyone have any questions on what I've talked about today that you wouldn't mind asking on the microphone that would eventually go on the CD that the bookstore sells? Anybody want to ask? Okay. Oh, come on up to the microphone, sir. I appreciate it. And I will always do my best to answer your questions. If I don't have an answer, I'll let you know. For anybody else in the audience, if you do have an answer, you talk to them afterwards about it, because I don't want them to say I said something and you're the one who said it. Okay. Yes, sir.
Yeah, my question is just as simple. It's part of the real estate.
Okay.
Yeah, I want to know more detail about LOC, because I was discussing it with my friend. Then he says it's not necessary, but I say from the financial class that I attend, it is very important. And if you want to expand more further in real estate business, I say with LOC, there's some point and advantage that is there, better than without LOC.
Okay. So you're referring to an LLC, if I understood you correctly? Okay, so an LLC, putting your real estate in there. I'll say this. If you want to invest in rental properties or any land or just land sitting there, sometimes it's good to have your property in an LLC for one specific reason. The only reason you would put your property in an LLC is so that if someone were to sue because of some accident, they want to sue you because of some accident that took place on your property, then that would limit your amount of personal liability. That is the only reason I can think of putting any rental property or property itself in an LLC. Now, even if you do put your rental properties in an LLC, which I'm not telling you not to do, I've advised people to do it. I'll continue to advise people to do it from time to time. I would just say that you still need to have enough liability insurance in addition to the LLC. So yeah, you definitely need to have liability insurance for any type of business that you're operating, But for rental properties, definitely you want liability insurance in addition to putting it in an LLC. The most effective way to do it is one property in an individual LLC, never more than one. That is the most effective way to do it. And be prepared to pay your tax person at least $1,000 for every LLC you own. Okay? Now, I prepare taxes, and I personally charge $1,500 per LLC because, number one, it takes me a little bit of time to put them together. So I just want you to be prepared for that as well. Anyone else with a question on these? Okay. Yes, sir, please. Anybody else? You just come make a line at the mic there. And afterwards, I'll entertain questions one-on-one on anything financially related also. Yes, sir.
My question is, what do you think about investing in an insurance company where you can accumulate cash and possibly use it for retirement?
Okay. What do I think of investing in an insurance company or an insurance product or just an insurance company?
Well, an insurance product where you can,
Okay.
where it accumulates cash and
Okay.
utilize for retirement.
All right. So what do I think of them? Okay, great. That's a good question. Good question. The question class refers to different insurance products that have what I call an investment feature. So there's usually an insurance portion of this product and an investment portion of the product. Now, what you need to understand, and this would include fixed annuities, variable annuities. It would also include life insurance, permanent life insurance policies like whole life, universal life, variable life, insurance policies. They have an insurance component to where if you die, your loved ones get a lot of money, or there's this savings component, investing in all sorts of stuff sometimes. What do I think of those? Here's the bottom line. You need an independent, objective person to talk to you about them because they may not be right for you. What I have personally observed is that people who buy what I call permanent insurance policies never or cannot afford to buy enough because it becomes too expensive to take care of their loved ones should they die. Now, that's what I've personally observed. So I never encourage people to buy permanent or whole life or universal variable life insurance products. Now, here is the truth. You can never have an insurance product and the investment savings component at the same time. You're never allowed to have both. You put the money in, they tell you about both, you can't have both. You either have the insurance or you have the savings and investment part. You can't have both. Meaning you die, your loved ones get all this money. They don't get the savings. Or while you're alive, you can take the savings component, but the life insurance goes away. You can't have both. That's just how they work. So the only people that I think are good to invest in these types of products are multi-millionaires because they're looking to save money in taxes for whatever reason. Some multimillionaires could care less about taxes, but they're looking to save money through taxes, from tax savings, I'll say, and they want to, and they've exhausted every other opportunity to do it any other way. That's the only people I would say they're appropriate for. But now, you talk to a salesman, an insurance salesman, man, they make such a great commission on them, and there's nothing illegal. They make such a great commission on them, they make them sound like the greatest thing since sliced bread. And I have clients that are insurance salesmen, and they do really well. They do really well. So there's nothing illegal. It's just selling you a product that you thought you, and here's the big thing, especially when it comes to variable annuities and fixed annuities. The salesman can tell you anything they want to tell you, but the only truth is in the contract. So basically what you want to do is, with the salesman in front of you, because I'm not saying these are horrible investments, what you want to do is have the salesman put the contract you're about to sign in front of you before he tells you about it. Every time he says something that sounds really good, ask him to point to it in the contract. Remember I said you got to learn to read stuff. Just ask him to point to it in the contract. Every time he says something good, tell him to point to it in the contract. Every time. When he says you're going to get this rate of return, say, okay, just point to the paragraph in this contract that says that's what I'm going to get. And every time, and then once he's done, say, now, what are the bad things in this contract? And he'll say, there are no bad things. That's when you say, great, I'm going to take this contract home. I'm going to review it with my independent advisor. And then they're not going to want you to walk away with the contract. And if you're old, because I do have some old people here, if you're old, they'll tell you, you know, this will make sure you never lose your money in the stock market. Buy this variable annuity, you know, which it's not always an insurance product, but, you know, but you need to understand, you may never lose your money, but you won't be able to get it when you want it. No, you won't. But whatever a salesman tells you, if a contract's involved that you have to sign, whenever they tell you something, or before they start telling you, say, put the contract in front of me, and every time you say something that's good, point to it in the contract. By law, a salesman can tell you anything they want to tell you, but the only thing that controls is what's in the contract. That's what I think of those products. Now remember, I got plenty of clients that sell this stuff. They do really well. I'm not mad at them. I got a client who sells pencils. Millionaire selling pencils. I'm not mad at him either. I'm like, it's just a pencil. He said, I sell pencils, man. Okay. So nothing illegal. All right. Any other questions on the mic? No? All right. Well, I tell you what, we'll draw this to a close right now, and I will entertain questions off mic. For anybody, I'll just stick around and answer questions for you. So thank you so much for coming today. If you enjoyed what you learned today, you know, tell pastor, tell someone on the family network, just, you know, one of those high-level people. Say, hey, you know, that's pretty good. Or if you didn't like it, say, you know what, we can stop those workshops. Okay. But we're here once a month, usually the first Sunday in every month, except for the months of, I think, January, and maybe depending on how the 4th of July works, okay? All right. So thank you so much, everybody.